In this video, we're going to discuss the current occupancy rates and how things have recovered now that most of the things that have happened post-pandemic. We're going to talk about that, and there was a great article that was put out by NIC, which I will actually link in the description of this video for a lot of you to review if you choose to. So with that being said, and if you're interested, make sure to stick around. What is going on, everyone? I hope you're all doing well. If you're new here, my name is Serge. Welcome to the channel. To all my reoccurring viewers, thank you so much for all the love and support that each and every single one of you have shown me. If you have not yet, make sure to go check out the God Made podcast on most streaming platforms. Also, feel free to go check out Legion Assisted Living Academy on Facebook. Also, you can feel free to check out legionassistedlivingacademy.com, where I teach how to start your own facility from A to Z. So make sure to check that out. Also, if you are looking to book a one-on-one mentorship call, you can do that as well. And if you are looking to actually come and be mentored by me for a day and meet me in person, etc., you can also do that in the link down below. And also feel free to go check out valleyalfventures.com to go check out our current portfolio. And also, if you're a limited partner looking to wanting to invest passively into this industry, check us out at valleyalfventures.com. Or if you're an operator looking to expand your operations, or if you're looking to potentially sell your facility, feel free to reach out to us. And with that all being said and the housekeeping being done, let's go ahead and jump into the topic of this video. So I have noticed, and a lot of people have asked me, have occupancy rates actually recovered post-pandemic? And this article from NIC actually talks more specifically to the memory care segment of this healthcare niche. But memory care does oftentimes correlate well with assisted living and with everything regarding residential assisted living. So it does actually help, and it does kind of forecast what the future looks like and what's currently going on in that market. So I'm actually going to be doing a screen share and show you guys this article, and we're going to go through it and kind of give you my thoughts on certain things as I point them out in the article. So let's go ahead and actually pull that article up here real quick. So there is page 2 here. So first things first, occupancy rate recovery. So we can see here up here to the right, the occupancy rate for memory care segments within the 99 NIC MAP primary and secondary markets recorded the second largest decline across senior housing segments and fell by 9.3 percentage points following the onset of the pandemic. From the lows in the first quarter of 2021, occupancy for memory care segments have been recovering relatively quickly and gained 8.2 percentage points to reach 82% in the first quarter of 2023. That places its only 1.1 percentage points below its pre-pandemic level of 83.1%. Occupancy for independent living, assisted living segments recovered 3.1 or 3.0 and 7.1 percentage points, respectively, from their pre-pandemic from their pandemic-related lows. But both segments still have the most room to make up, with a gap of 3.8 percentage points from the pre-pandemic level of 90% for independent living segments, and a gap of 3.4 percentage points from the pre-pandemic level of 85.6% for assisted living segments. So it just goes to show that things are starting to recover pretty well for, assisted living, independent living, and even memory care. And that is really good news in regards to what the forecast shows. So, they still have some room to recover. And this allows for people who are getting into this industry to kind of gain that market share and kind of increase the value of certain businesses that were showing decline and struggling during the pandemic and even pre-pandemic. So you can see here on the memory care segments and the map here, kind of where we were at Q1 of 2021 with 73.8% is where the occupancy levels were. And then it going up to 82% for the first quarter of 2023. That being from January to March is typically the Q1 portion. So that is really good news. And the fact that there's still room to grow will help increase if you're able to get certain deals at a discount in certain business that are struggling, to be able to increase that value there. So it is good to see that we're not too far off from the pre-pandemic levels that most of these facilities were at, which again is really good news. So you can see here demand dynamics. Similarly, memory care segments in the 99 NIC MAP primary and secondary markets experienced notable demand growth ahead of the pandemic. In fact, over the 5-year period prior to the pandemic, so before the pandemic, occupied stock for memory care segments increased by 40.2%. Really, really interesting. As we go through this to the next page here, so page 4 here, you guys can see here the different campus types. This is kind of the CCRCs combined and then freestanding, but I'll talk about kind of the bold highlights. You guys can, again, it's not a long article, it's a good one. So I like how they kind of put this here. Fast forward to the first quarter of 2023, the memory care segments of 70% of properties have achieved occupancy rates of 80% or higher, matching the pre-pandemic levels of the first quarter of 2020. Additionally, an impressive 84% of properties now have occupancy rates of 70% or higher for memory care, surpassing the shared record in the first quarter of 2020. So pretty much what is that saying? You can see that a lot more properties are starting to achieve 80% or higher and matching the pre-pandemic levels, which is really good to see. And this is more so to memory care, but again, it is going to continue to recover really well. And I think with the demand and with everything that's happened with the pandemic, a lot more families are starting to realize that maybe they start shifting into smaller settings like residential assisted living, which again, this is on more commercialized. This article specifically is more commercialized, but again, families will continue to look for different alternative types of care, which residential assisted living will play a huge factor into. So that's something to keep in mind. So in the first quarter, another thing I like to point out here is kind of this whole section right here. Exhibit 3 below examines the occupancy distribution for memory care segments using the same store methodology to include only those properties that have been open and reporting data, at least since Q1 of 2020. In the first quarter of 2020, more than 50% of the memory care segments in the NIC MAP primary and secondary markets had occupancy rates above 90%. So only 50% of facilities had above 90%, and that was in the first quarter of 2020. At the worst of the pandemic, this figure fell to 29%, and as of today, it has increased to 45%. Further, 70% of properties had occupancy rates of 80% or higher in the pre-pandemic period. So only 70% of properties had occupancy rates of 80% or higher in the pre-pandemic period, while 82% of properties had occupancy rates of 70% or higher during that time. However, during the peak of the pandemic in the first quarter of 2021, these figures experienced a notable decline, which is understandable, right? We kind of knew that, and it's good to really see. And even in my current facilities that I have operators who lease and run their business, and a majority of them are staying over that 80 to 90% occupancy level, which is really great to see across the board, across multiple facilities that we have. They're sitting above that. There are a smaller percentage that are sitting just over that 70% occupancy, but for most part, a majority of them are staying at either full occupancy or they don't drop below that 80% occupancy level. And they're staying very consistent and are getting the rates that they are trying to charge. So with that being said, there are a lot of facilities right now where you can go in and try to force value add and be able to take an underperforming business and be able to force that value add and potentially turn around and sell it for a profit, or even continue to run it and continue to grow your business. And there's a lot of things that are happening right now in the current climate of the economy that we're in with the high interest rate. People are not sure how things are going to happen with the inflation. Everybody's a little worried. So with these businesses that are struggling, you can come in and really get some bargain deals. Again, you have to be looking for them. You have to be in the trenches, be constantly keeping your ear to the ground, trying to see who is trying to sell what is currently being sold. We're currently working a deal off market right now where, yes, it is a turnkey operation, but we are getting it off market and are getting it because the current owner just does no longer want to be a part of it, just wants to get his hands rid of it and move on to another thing. Now that's allowed us to be able to come in, get it for a good bargain. We're seeing similar types of businesses and even the same bed count that it's licensed for, turnkey, being sold for almost 2x of what we're going to be paying for this current business. So these are just current opportunities, current things that are happening in the market. And I suggest that you continue to keep your ear down to the ground. Reach out to me if you need to get advice, to be able to kind of mentor you during this process. And so with that being said, I hope that you guys enjoyed this. Again, the article will be down in the description of this video. And with that, I will talk to you all in the next video. God bless.